Go to your recent piece, opinion piece in the Wall Street Journal. You say a return to normalcy will be the Fed's biggest test. Are we at normalcy yet?
Right.
Will we know when we get to normalcy?
Well, we're almost certainly not at normal yet. I was a little surprised. I thought it was like a 55-45 chance that they would drop, that they wouldn't drop the accommodative, because I think they're still accommodative. I think by any reasonable reckoning, we still have low interest rates. That is, interest rates that are below neutral. Will we know when we get there? That was one of the points of my Wall Street Journal piece. And I might say, and much more importantly, of Chairman Powell's Jackson Hole speech, that there's a huge amount of uncertainty surrounding this concept of the neutral interest rate. So we might not. It's not like a bell goes off or something like that when you hit neutral. You're constantly estimating and re-estimating where neutral is and watching what the economy does. So we won't really know when we arrive there.
I should mention as well, Tom, that we've seen U.S. stocks take another leg higher along with the Dow. The S&P at a record high, new record high, the S&P back to its high since September 21st, so revisiting those levels.
Dow a bit away from that as well. Professor Blinder, Scott Minerd of Guggenheim, when we were talking earlier, mentioned the idea of an exogenous shock. Usually that can come, Alan Blinder, from a misallocation of capital. Are we still at a point where we're making possibly dumb decisions because capital is so cheap?
Yeah, that's quite possible. And, you know, if I wouldn't sound like a troglodyte, I might suggest some of the cryptocurrency and social media stocks. Not that I want to imply that they're worthless, but some of the prices of some of those things seems kind of wild to me, but obviously not so wild to other people who are buying these things. So only time will tell. If that's right, we will look back at this episode and say there was, in fact, a misallocation of capital. Too much capital going into those things, too little going into some other things.
Are we in a stock market bubble, Professor Blinder? You look at the S&P 500 at a record high, which we just mentioned. You look at some of the mania surrounding those marijuana stocks like Tilray, which went from $17 in mid-July when it IPO'd to above $300 not so long ago and back to the $100 range.
You know, nobody knows. My hunch is not, and I base that hunch for the overall stock market, not to mention, I don't mean that to imply to various corners of the stock market. I had just mentioned social media companies. You just mentioned marijuana companies. There are probably some others too. But, you know, when I see the people are making a big deal, as they do, of the stock market hitting new highs. And it is true, but the more important truth of the matter is the stock market's only up quite modestly this year, since January. Bubbles aren't usually like that. When you look back at the history of a bubble, you usually see things soaring late in the bubble, the market going really crazy. It doesn't look that way to me right now.